You won't believe how many times I've been in a situation where a buyer who was ready to go, they had the pre-approval, we had everything signed, all the contingencies, all the repairs have been made by the seller. Seller even agreed to give a little bit of money towards closing costs, and then a few days before closing, we realized that the loan is not going to go through. And why? Because the buyer did something that they shouldn't have done. So today I'd like to talk a little bit about what you should avoid doing once you've been approved for a mortgage. Things you definitely need to wait with doing, or maybe not do at all. My name is Danholm, and I'm a real estate broker here in Central Florida. I work with buyers and sellers all over the state, and I'm also the guy who gives you sound advice on a pretty regular basis. So one of the things you should avoid is depositing large amounts into your bank account. And it may sound a little bit silly. Why, if I deposit $5,000 or $10,000 into my account, why is that not a good thing? I have more money now. Well, the thing is, lenders, they like to be able to trace the source of your money. And especially if you deposit cash into your account, that is not easily traceable. So they need to know the source of your money. So if you can't come up with not just a feasible explanation, but also prove that your explanation is true, then that might ruin your pre-approval and your ability to get that mortgage that you need to buy that next house. Another thing that's really, really important is do not make any large purchases when you get especially if you buy on credit, because when you got approved, the lender looked at many things, and one of the things they looked at was your debt to income ratio, and that is how much money do you owe compared to how much money you make. So if you go out and buy, say, a new car and you get a car loan on that, then that debt to income ratio is suddenly a whole lot different than it was before. And meaning that you owe a lot more than you did before. And even though you can afford the payments, it doesn't really matter, because it changes the whole foundation for your mortgage approval. But it can also be a problem if you just pay that car with cash, because sometimes your reserves, quite often your reserves are a big part of what makes you eligible for that mortgage. So if you go spend your reserves on stuff like a car or furniture or whatever, so please try to hold off on any new large purchases. Even things for your new home is better off waiting till once you moved in, or at least you closed on your mortgage. Another big thing we often see is people who go and they have a friend or family member who needs to go, and they need to borrow some money, or they might need to rent an apartment, or they have some kind of big thing they want to do, but they don't quite have the credit themselves to do it. So hey, here you are, you just proved you had good credit, so why don't I just co-sign for you? It's very nice of you, but the problem with that is when you co-sign, your debt goes up again, because the mortgage lender will say, hey, well, we need to take into consideration that you might have to pay this loan. So we will, just to be on the safe side, we will actually consider that you have to pay on that loan. So no matter how much you tell them that, well, I'm not actually the one paying, I'm just the backup plan. If they can't pay, well, then we go with a backup plan. You will be, when they look at your application, that's what they look at, that you have to pay that monthly payment on that apartment or that loan or whatever that is. Do not switch bank accounts. Mortgage lenders, they, like I said before, they need to be able to know the source of your money. So they need to be able to trace your assets, everything you have, everything you own. They need to know where it is. So when you move money around, that suddenly becomes a problem, because what happens to that money, they have to go through the whole process again. And maybe this might not be a huge problem, but it could cause you some problems in the process. The final one I'm going to talk about is do not take on any new credit at all. I mean, even a new credit card or anything. So if you need to borrow money for whatever reason, put it off till after you closed on your loan. And actually there's one more. Don't close any accounts. So often people think, hey, it's maybe I don't want to show that I have this much credit available, so I'm going to close a couple of my credit cards. I don't use them anyways. That's a problem, because when the lender approved you, they looked at how much of your available credit you were using. So if you remove some of that available credit, you're suddenly using a lot more credit. And also they like to see you being able to manage your credit. So it's actually better to have a card that you rarely use, just use sort of casually and pay off, than having to close a card because you don't want to risk showing high money. As strange as it sounds, having a high credit availability and not using it is a lot better than having just a few $1,000s credit available and using it. Sounds strange maybe, but that's the way it is. So one of the things you really want to do, that you need to do, is if you are going to make any changes at all, anything, even if it doesn't sound like it's a big deal or this is just a major, and even if you think it's improved your credibility, your credits, then discuss it with your loan officer before you make any changes. Ask them, if I want to do this, is it even something I should do? And if I'm doing it, what should I make sure I do so you guys are still happy with my mortgage application and you're not going to decline me later on. So whatever you do, make sure you discuss it with your loan officer. So let's go over these things again, at least the things I can remember off the top of my head. Don't take on any new debt. Don't make any big purchases. Do not co-sign any loans with anyone. Don't go and close any credit cards. Don't move any money around that you don't have to. And if you do, if it's larger amounts, then make sure you talk to your loan officer. Don't make any large deposits into your bank account. And if you do, definitely with that one, talk to your loan officer so you know that you get the right information in there so that everything is traceable. We have seen people where they've been approved and then when they've been asked for statements, and the mortgage company went back a month and said, hey, you deposited 10 grand into your account in May of last year. Why did you get that money? Where did it come from? So if you do have any large deposits into your account, anything that's not directly traceable, such as cash or something that doesn't come from a trade, you sold something, or your salaries or the bonus or anything like that, make sure you disclose that to your loan officer beforehand, and don't make any of these deposits after you've been approved unless you discuss it with your loan officer. Say, I'm sorry about being this blunt about things, but it is just so devastating when you think you have purchased a home and then suddenly the loan doesn't go through because you did something you thought was a good idea, but the mortgage company did definitely not agree with that being a good idea. I hope you enjoyed this. I hope you find it useful, and I'm looking forward to seeing you next time. Thank you for watching. Bye bye.